Hello again, and welcome to your next lesson of the Accelerated Investor Program with me, Warren Jeffery. So far, I've shown you how you can start to grow your own 100,000 Rand to 1 million by investing in shares. We've covered what you need to look out for when you invest in explosive growth shares and even blue chip shares. Now, today, we're going to mix things up a bit and look at how you can diversify your portfolio by investing in property. We've all been told since we were young what a great investment property is, and I couldn't agree more. In fact, I believe property is an absolutely crucial investment to help you grow your million rand portfolio, but not necessarily in the way you think. Today, Francois Joubert will be joining us again to reveal the best way for you to reap the rewards of investing in property. Francois, thank you for joining us again. I know you're a big fan of property. In fact, you already hold a great income-producing property investment portfolio of your own. Can you tell us why investors should get into property today, and elaborate on some of your favorite ways to invest in it?
Thanks for having me, Warren. You're absolutely right. I love property. You see, the great thing about property is a few well-chosen investments can really deliver massive gains to boost your investment portfolio. But there's a lot more to property than simply buying a house or two to rent. In fact, today there's a whole world of opportunities available for you to invest in property. Let's take a look at a couple of my favorites. The first way you can own your own piece of property is to buy actual physical property, such as a piece of land or a house. Buying your own property like this can be a very lucrative investment, but it's the most risky. That's because it takes a lot of capital to get into actual property. And it takes a lot of work and research to make sure you buy a property that will appreciate in value and that you'll easily be able to generate rental income from. For these reasons, I only recommend buying actual property as an investment after you have built a fully balanced investment portfolio like the one you're building in this Accelerated Investor Program. Of course, if you're ready to buy property now and you're looking for guidance on how to do it, then I suggest you look at my Become a Master Property Investor in 90 Days program. You'll find the details on this step-by-step guide in the resources section of your online classroom, or by clicking on the link at the end of this lesson. Now let's move on. The second way to invest in property is to invest in listed property shares. Listed property companies are shares in the property companies listed on the JSE. These companies specialize in commercial property and are focused on generating growing returns for investors while also paying out income. I'm talking about property companies like Redefine and Growthpoint. They own prime properties like Sandton City and the V&A waterfront, and a multitude of other great centres in great locations from which they generate a steady rental income from their tenants. These listed property investments offer you a less risky and less expensive way to invest in property while still offering substantial opportunities to profit. There's still work involved in this kind of investment, as you'll have to look at different companies listed on the JSE and then decide which is the best investment for you. So, when you want to buy one of these property shares, there are a couple of things you should look at to find the best investments. For starters, look at what is called the yield of the share. The yield is a ratio that shows you how much of the income they earn from the listed property is paid to you. It's effectively the rental income that you'll be getting paid. The higher this is and the more consistent the company's ability to increase this, the better investment the company is likely to be. Consider Resilient. Resilient has generated investors a steady income by paying out a yield of more than 5% every year, while steadily increasing its dividends. In fact, Resilient has increased its dividend twice a year since 2004. This kind of consistency highlights a great property investment opportunity. The third way you can invest in property is to buy a property ETF. Like Warren outlined in Step 3 of the Accelerated Investor Program, ETFs allow you to get exposure to an entire sector of the market with just one purchase. For a no-fuss, low-risk, low-cost way to invest in property, there's little that can compete with a property ETF. I like the Property Index Tracker SAPY ETF or the Property Index Tracker Top 10 ETF, as they offer you exposure to the property market with virtually no effort required from you. So there you have it. The 3 ways to diversify your investment and start growing your million rand portfolio with the power of property. For my money, I suggest you start off investing in a property ETF while you get familiar with the markets. Then, as you build up your experience, you can start selecting actual property shares to invest in. And finally, once you've built up your capital, you can start looking for the real profit spinners that can be found in physical property.
Thank you, Francois. Those insights are perfect to help anyone put property to work in building their million rand portfolio. Property will make up the third piece of your million rand portfolio pie. Allocate 10% of your 100,000 rand, that's 10,000 rand, to property investments. So get out there and invest in property today. And remember, if you have any questions for Francois or I about this lesson, you can always ask us at theinvestorsclub.co.za. In the next lesson of your Accelerated Investor Program, we'll explain how to take your growth global with offshore shares. So, make sure you don't miss it. Until then, here's to staying ahead of the game.